Bitcoin has fallen by over 4.7% since Thursday. In today's video, we're going to be taking a look at the technical analysis on Bitcoin, sharing my thoughts and opinions as to where I think the price action is heading next, considering all the latest moves. Today is Sunday, so this could be a crucial close on the weekly time frame. So we'll try to spend some time on the hourly, daily, and weekly reviewing the price action of Bitcoin. As I get into today's video, if you do find it useful, smash the like button. If you're new, subscribe, and let's jump into the charts. So here we have Bitcoin paired up with the USDT. We're on the 1 hour chart here, paired up with the USDT on Binance. So as you can kind of see, we've been rejected from the 50 EMA, 50 SMA pretty consistently. We were actually quite surprised in the last TA video, I think it was about 2 days ago. We were hoping to see rejection in and around the kind of 50 EMA, 50 SMAs. And specifically because we broke down here, right? We were looking at this upper area of resistance. We did say it had the potential to move up a little bit further. And you can see that we really did come up into this pocket here. But, we weren't expecting it. So it was a little bit of a push to the upside. A few liquidations occurred for essentially the people going short on the market, only to then, of course, really go down and come and set a new lower low down here on Friday. Okay, so as we can kind of see, we topped out up here at that kind of level of 61,166. We fell down 5.67% onto the Friday, and at the point of recording, we're actually hovering around 4.18. We obviously had that 4.7 about an hour ago. Okay, so it's interesting. Rejection on the 50 EMA, 50 SMA is a really, really key point for Bitcoin. Okay, so we were looking to try to go short here, but I was a bit busy and I actually missed the opportunity to do this. But essentially what the play would have been to go short on this candle right here with the second closed of the rejection on the 50 SMA. Tight stop loss, I probably would have targeted a little bit on the higher side, probably above the 50 EMA, maybe even this swing high a little bit higher. I'm just going to, for the purpose of today's example, just going to put that just above that previous swing high that we saw at the 0400 hours on Saturday. And we'll target out 1.5, and you can see we would have easily hit our 1.5 risk reward ratio here on the short. So really a quick, nice little trade there. This is the thing about the hourly charts that's really, really good, really powerful, is you can trade these really, really quickly with reasonable R&Rs, okay, risk reward ratios. So where do we see Bitcoin going next? Well, with this particular move to the downside, does it look like we are done? I'm not 100% convinced on that. I think we have the potential here for a bit of a surge to the upside. The next real move is a test of the 200 EMA, in my opinion. If we take a look, if we have bottomed, which is, is a scenario that we have to kind of consider, we are looking for $60,062 up to that $60,490. So on the weekly close, that's going to be an interesting thing to keep an eye on. We'll have a look at that in a moment on the weekly time frame. So do stick with me for that one. But here you can see that this area would coincide with our hourly 200 EMA, previous area of resistance quite a few times, as you can see. This will be the third test. Chances are, we would get rejected, but it's possible that we do push through. So we'll keep an eye on that. On the macro timeframes. In terms of our structures here, it's quite interesting the way that we have this overlapping nature. We do see some interesting double top situations right in here. And you can see that this wick is slightly higher. So this one right here comes in at 59,140, and this one is 59,141. Okay, so really close, but this one is technically higher. So we can see here that we have a push of a kind of three-wave move coming up, double top, and then drop. That's important because it does mean that this is not an impulsive breakdown. That's not a wave one. So we can't look at the market and go wave 1, 2, 3, 4, 5, and so forth, right? It doesn't work. But what we can do is we can say, okay, well, we have this move to the downside, we bounced up, we moved down. Is that in line with our expectations? And well, if we measure the distances here and we say, okay, well, where does that currently sit? You can see, yes, it fell right in line with our expectations on that area, right between 58,259 and 58,426, right? So that essentially does, to me, look like it is complete. Although we might come down a little bit, over the next few hours or so and just kind of retest, it doesn't tell me that we should be expecting more to the downside. Instead, it looks to me like we have completed a three-wave correction here, and this is a part of a bigger three-wave correction to the upside, like so, testing out that that 200 EMA. Stochastic RSIs are also kind of aligning to this idea. We are oversold on the 1 hour. On the 4 hour, we are in this kind of mid-level, potentially looking for that push to the upside. We are in above the mid-level, so still bullish technically after a nice little correction on the 4 hourly time frame. So we'll be looking for this to potentially push up a little bit over the next little bit. So potential long. How would I trade it? Well, the trade here would be that let's get a second closed green candle here to prove that we have in fact, or at least confirmed our reversal. If we do get another closed green, I'll be looking to put the stop loss lower than a previous swing low, target out the 200 EMA. If you really want to kind of go longer, I personally would be looking for 1.5, as I often say. So that would put my take profit up in this previous area of resistance, as you can see, a little bit short of our actual target range, but for the most part, that there would be kind of the approach. Stop loss at 57,687, hypothetically, entry approximately 58,587, and take profit 59,900, right? Risk reward ratio 5 to 1, or $1.50 for every $1 of risk. So that would be how I would look at it. That would be my approach. This still, unfortunately, does look bearish at the minute. Even with this bounce, we would still be looking for moves to the downside. So let's roll this up into a daily and take a look at that. So here we can see we tapped into that upper range. We're looking for a relief rally, and this particular interesting range that we were kind of scoping out could be in line with a bounce towards the rejection from 50 EMA on the daily time frame. We are, of course, bearish, lower than our 200 daily EMA here. But obviously, we've seen volatility in the wicks with both directions. The market is a little bit undecided, and this is basically looking for a reversal to the upside. I just don't think it's going to happen just yet. So that bounce to the upside, we might see another wick into that range, that we were talking about on the hourly chart. From there, do I see it going a little bit further? It's possible. We've spoken about the idea about maybe coming up more into the kind of low 60s, coming up and testing the 50 SMA as an example. But it doesn't really change our idea of moving down, because we do think we still have this potential move to the downside for we are still targeting those lows. But I do expect a significant bounce to the upside first. And if we can kind of complete this structure, we could potentially be looking at the higher 60s before we get into those lows around 40. But we'll have to keep a close eye on it, and as more data becomes available, kind of give new kind of thoughts and opinions based on the new data essentially. But for now, this looks like we should be thinking about a small relief rally, a bit more of a move to the downside, and ultimately we are still targeting out those lows. On a weekly time frame, we take a look at where the bullish and bears are, or the bulls and the bears are trying to kind of get the price action. We are still relatively bullish on our weekly time frame. I'm not too concerned. In terms of like points of note or things to kind of reference here on the weekly, our $40,000 to $44,000 is right inside this previous area of consolidation, and it is still higher than the 200 weekly EMA. So I'm not concerned about any of that. In terms of where the bears are going to look to try to take the price, they're probably going to look to see if they can get a close lower than the 50 EMA, currently 54,111, but very unlikely that that's going to happen. So I'm not expecting any of that. The bulls, well, they need to get a higher high, and they're just not going to, in my opinion. I don't think we're going to see that. So we are still in lower lows and lower highs on our weekly time frame in the same way that we are on our daily time frame. So not a lot's really changing there. But since we had this move to the downside, there are some concerns. Obviously, I still see this as a bit of a move to the downside, probably during the month of September. But I don't think it's going to be straight lines. I think we're going to see bounces to relief rallies to the upside on our journey to the downside. I expect a lot of liquidations, both on longs and on shorts. I don't think this is going to be a one-sided market. I think this is going to basically be pretty even according to kind of the data that I'm looking at in terms of the price action, the charts. I just see more overlapping candlesticks price action, and although we do expect a move down, I think it's going to be gradual. That being said, the Federal Reserve pivot could be a spanner in that, and we might see more of a dramatic drop, but I think it'll be knee-jerk, and I think recovery will be reasonably quick afterwards as well. So not a lot to really kind of note on the weekly. If I bring on the Gaussian channel, you can also see that we will not be looking, we don't want to see, is a closed position inside the Gaussian channel. The higher band on the Gaussian channel is coming in at 51,263, mid band at 44,752, and the lower band at 38,241. Now we can come inside it with a wick, but we don't want to see any close positions. Historically, every time we've closed inside, we've gone down into a bear market. So from a Gaussian channel point of view, we're going to keep an eye on that. We're going to make sure that we stay above from a closed position. We can wick in, that's not a problem. Of course, there's a couple of occasions where we see here at the start of say mid 2023, we can see that we come in here and we try to get a clean break to the upside. Since we've been above it, we haven't come back in, and the second that we do, it's not going to be confident from a trader's point of view. So interestingly, on the weekly, there's not terribly too much to be concerned with, in my opinion, just more of the same. Liquidity being extracted from the market is kind of the message I've been putting out for a while. Expect the unexpected, all that kind of usual stuff. And in the case of Bitcoin here, pretty much business as usual. Expect to see the market kind of push up and liquidate the shorts and then dump down and liquidate the longs. I think ultimately it's just the market is extracting liquidity at the minute. Until we see new fresh demand coming in, it's going to be more of the same in my opinion. But you guys can let me know what your thoughts are in the comments below, or join us in our free Discord server. I'd love to get your thoughts and opinions on everything that's going on there. And if you haven't done so yet, guys, check out my second channel where I go through Cardano's technical analysis just here.